Hey y'all, so the US stock market Thursday and Friday last week took a big dive, and all indications are today's Monday, it's going to open down a bunch more, down around 10% or more in 3 days. My portfolio is down over 20% in those 2 days and looking to open even lower again today. But what does that mean for my retirement? What are the impacts to your upcoming retirement or your existing retirement? In this video, I'm going to give you 5 ideas to help you make money in a down market. Now, this is not financial advice, just ideas that I have and things that I have done or am doing to make myself some profit when the market is tanking. Stick around. All right, we're going to start with a couple of good rules for investing when trading times are like we're seeing right now. First of all, don't panic. The old saying, what goes up must come down. Well, in this market, what goes down will come up. Look at history. It shows you when the market's high, it'll drop. When the market's low, it'll go back up. It goes up and down. Now, I mentioned that my portfolio is down over 20% in 2 days. That's the value of the portfolio. I haven't made or lost a penny because I haven't sold anything. The value will go up, the value will go down. But you don't make money and you don't lose money in the stock market until you actually make a trade. And that leads me to rule number 2. Don't sell. If you don't sell, you won't lose anything. Now, of course, if you have to for some reason, you have to, and you just got to kind of take it on the chin. But when the markets are taking a beating like this, just don't sell. Here are 5 things you can do other than selling your stock that would make you money at times like this. There's an old saying in investing, buy low, sell high. Well, prices are low right now, maybe getting lower today, so there will come a time when you think a stock you're looking at is as low as it will go. Buy it. If you already own some and you own it at a higher price, well, if you think that was a good stock to buy at 100 and now that stock's at 50, it's a better buy at 50, isn't it? It's like a fire sale or a garage sale on stocks right now. So if you're sitting on cash and you want to do some investing, looks like a great time to buy some more stocks. So buy more, buy low, sell high. Now the next couple of ideas I've got for you require that you have access to be able to buy and sell options. If you're not familiar with options, this isn't the time to learn about them. And there are lots of ways to learn about them. Options are a great way to make money in up markets, but they're also a great way to make money in down markets. The first options tool I'm going to talk about is selling cash secured puts. So you're going to sell a put or the option for someone to sell 100 shares of a stock at a set price before the expiration date of the option. You're going to get paid to put that option out on the market. Now, you've got to have enough cash in your account to actually be able to buy the underlying stock at that price if your option is assigned. So there's some risk there, but the good thing is that you're going to sell these puts in stocks that you would really buy. Let's say that $50 stock we talked about before is still on its way down, so you're not ready to buy it. You're going to sell a cash secured put at 25 for that stock. You'd be happy to buy 100 shares of that stock at 25 if your option gets assigned, but you've got to have $2,500 set aside because each option contract is for 100 shares. So 25 times 100, $2,500. You've got to have that set aside. It will get held in your account. That option is then sold. You are immediately paid for creating that option and putting it out there on the market. That is your money to keep. That's cash in your pocket. 2 things can happen. That option can expire worthless. You're not out anything. You already got paid for creating the contract, or the stock gets to 25 or goes even lower and the option gets assigned. That means you have to buy 100 shares of that stock at 25 to cover that option. You now own that stock at a price you were happy to buy it at. So when it goes back up, you're going to make some nice profit off of that. You still keep all the cash you received when you created that option. Hey, real quick before I go any further, drop down and in the comments, let me know now if you use options in your investing to help you generate income. The next way you can use options in a down market to make even more profit for yourself is to buy put options. Buying a put option means that you think that stock is going to go lower and it's going to reach that point before the expiration date. So you'll buy the option in hopes that the price will continue to go down. As the price goes down and gets closer to that option strike price, or the price it was created at, the value of that option goes up. Now, time does work against you in options, so that the longer you hold it, even if the stock doesn't change price in a day, the value of the option will go down because time eats that away. And there are big explanations for that and technical explanations that I'm just not going to get into. If you need to learn options, go learn about those somewhere else. Buying puts is a great way to make money if you think the stock is going to continue to go down, because as the option value increases, you can then sell that option at a higher price and take the profit. The next options tool is the exact opposite of buying puts, and that's buying calls. This is when you expect the price to go up. So now you think the stock has hit its bottom or it's near that and it will be going up in the future. You can buy a call option or a contract to buy 100 shares of stock by a set date at a set price. That's the strike price and the expiration date. You'll buy hoping that the stock price increases. And as the stock price gets closer to the strike price of the option, the value of the option goes up. So then again, you will either be able to buy those shares at that price or before expiration, sell those contracts at a higher price than what you paid, and you make the difference. The last options tool I'm going to talk about is the exact opposite of the first one. Instead of selling puts, you're going to sell covered calls. Now, this is where you already own the stock. If you own 100 shares of a stock and it has options contracts available on it, you can sell a call or write a call that creates the opportunity for someone to buy those shares at a future date at a specific price. When you create the contract, when you sell that contract, you immediately are paid the commission for that contract. So if you sell a contract on 100 shares of your stock and it pays $2, you're going to get $200 cash into your account, yours to keep, just like before. If the stock reaches that price or higher and is executed, you then lose your stock. It's going to sell, but it's going to sell at the contract price. So the risk you have is that, say I sold that call at 100 and the stock is now at 102. I can only sell it for 100 at the execution. They're going to take it, they're going to give me $100 a share because that's the contract I wrote. So you're going to lose out on anything above that, and there's just a little opportunity cost in that. But keep in mind, you already made money when you wrote the contract, so that offsets any potential lost revenue. You're still going to make a profit, maybe just not as much as you would if you'd held on to the stock and sold it, but you generated a lot of income for yourself. If all of that has just sounded like total nonsense, but you're interested in how to learn more about options, I'm going to put a link or two down in the description. One of them is going to be just basic options information, everything you need to know about options to get you started. And the other one I'm going to put is specific to how to use covered calls to generate what is essentially rental income on your stocks. You're holding the stock, might as well rent them out and make some money in the meantime. So hit those links in the description if you are interested in those. They are US links, but if you're watching from somewhere else in the world that is served by Amazon, they will route you to the one that takes care of your location. And full disclosure, they are affiliate links. So if you click on them and then buy from Amazon those books or anything else while you're on there, I'll make a real small commission and you'll be supporting the channel. I appreciate it. Thank you. Let's get back to it. There are lots of other ways to make money in the market. And the key thing to remember is don't sell in a down market unless you absolutely have to. You want to buy low and sell high. So if the market's down, you don't want to sell low. If anything, it's a time to buy more. Good stocks to buy when the market is down are those dividend stocks that I love so much. Let me give you an example now of how I used two of those points just last week to lock in more than $7,000 of income for me. So Pilgrim's Pride, the ticker symbol is PPC, announced that they were going to pay a special dividend of $6.30 per share. on April 17th. Now you had to own the stock before April 3rd in order to qualify for this. So the ex-dividend date was April 3rd, the payable date is April 17th. I bought 1,000 shares of Pilgrim's Pride before the deadline of April 3rd, which means on April 17th, I'm going to get paid $6.30 times 1,000 shares. $6,300 is going to be put into my account from the dividends on April 17th. So that's number one. I bought low and I'm going to hold on to it and sell high. So the next thing I did was go and look at the options for PPC. And with 1,000 shares now in my account, I could sell covered calls, 10 of them, for $1, which means $1 per share, $1,000. When I sold those contracts, $1,000 was put in my account in cash. So last week, $1,000 in cash hit my account. Next week, $6,300 is going to be put in my account from the dividends. So even if the share price drops a little bit, that's going to be offset by $7,000 worth of income that's coming in. But I don't expect the share price to drop that much. Maybe in this down market it will. But one of the other reasons I bought the stock is I believe it will go up. So I'm going to make money off of the share price, and I'm going to make $7,300 off of dividends and options. And of course, when those options expire, I'm going to write 10 more or sell 10 more. You can keep selling those options over and over again to keep generating income in your account. $7,000 income for me. Buy low, sell high, use options. Let's keep going. So back to the original question that we asked at the beginning of the video, what does the stock market going in the tank mean to my retirement? Nothing. Nothing at this point, right? Because I'm not in a position where I have to sell any of my shares to live. So I'm just holding on to them. I'm selling my options. I'm using option strategies to generate income, and I'm collecting dividends that in some cases are buying me more shares that are going to generate more dividends on those new shares, or I'm taking some cash just to hold in my account to use as a buying opportunity while the market is low. Maybe I'll buy something else. I don't know. So nothing. The ups and downs of the stock market day to day shouldn't worry you as a long-term investor. Now, if you're a day trader, that's a whole different story and has nothing to do with this video. But for retirement purposes, the buy and hold and buy good companies and use dividend stocks to generate income, all of that still holds true. Buy low, sell high, hold on for dear life and collect those dividends. I hope your portfolio is in better shape than mine, but I'm not worried about it because I know my portfolio is going to go back up. And in the meantime, I'm set. I'll see you in the next one.